So yesterday we were discussing the potential for Bitcoin on the 1 hour time frame to both head down to the fair value gap or potentially break up towards this fair value gap here. I did believe that we were likely to see more of a move to the downside to complete out the fair value gap down below, and this was because of a W, X, Y, X and Z structure. So we were first looking for this move to the downside yesterday, and then obviously once we had completed this Z wave structure, we'll look for a bounce to the upside. Now, with yesterday being FMOC, we saw a few interesting candles. Let's go ahead and just play what was going on here for this. So we can see here that we took out that fair value gap to start with, and of course from here we found resistance on the 50 EMA, and then we rallied all the way back up, taking out that additional fair value gap. You can see that more fair value gaps appeared here, and they were also taken out over time, all the way back down to that 200 hourly EMA. Okay, we can see here now at the point of recording today's video that is exactly where we are fighting. We're fighting against that 200 hourly EMA. So in today's video, guys, we're going to be reviewing what now is likely to unfold with BTC after everything that we spoke about yesterday kind of unfolding in a very short space of time. Let's roll that intro and get right down into it. Okay guys, so here we have Bitcoin paired up with USDT on the 1 hour Binance chart. I know that yesterday's video may have been quite confusing for those people who didn't really watch the entire video. Maybe they skipped along, they didn't really pay attention, or maybe they just looked at the title and the thumbnail and came to the wrong conclusions. Ultimately, the move to the downside did occur. We finished off our W, X, Y, X, and Z structure, as you can see right inside here. So W, X, Y, X, and Z. We did push back up, failing to breach the high up here, okay, and then we've started to come all the way back down again here. Now, what's interesting about this current structure right here, if I go ahead and use the fibs, we can see that we bounced up to this level. We can see that we failed to hit the 1.618, and instead what we have is a W, X, Y, X, and Z again, also meeting its requirements. So again, we have another W, X, Y, X, and Z. Okay, so we have two W, X, Y, X, and Z patterns. People kind of might want to think of them as impulsive or something like that, like a 5-wave structure, but that's not really what's going on from my point of view here. Now, with this completing and finding ourselves on this 200 EMA as resistance, my expectation is a move upwards. Now, of course, this move to the upside is going to be met with resistance around the 50 EMA and the 50 SMA. As you can see here, the red line being the 50 EMA, coming in at $42,710. Now, the yellow line, the 50 SMA, is coming in at $42,948. These are going to be resistance areas for us. Now, we can also note that if we kind of think about this little range right here, between 43,114 and 43,287, this is also going to be an area of resistance for us. So I'm not likely to think that we're going to push past this range, in my opinion. It might even be a little bit lower here, actually, because we can see that there is this area of resistance that we already found. It also happened to be brief support before losing it again. So it's more 43,045 to 43,287. Now, if I do go ahead and throw some smart money concepts on here, you can see that there's a fair value gap. The fair value gap is sitting right up here as well. This is basically 42,707 to 43,041. This is also in line with our 50 EMA, the red line, and the 50 SMA, the yellow line. So chances are this is really where the resistance is. I think we're going to push past briefly of 50 EMA, 50 SMA, take out the fair value gap, and push up into the upper area of resistance, this area of supply coming in to basically take the price action even further to the downside. Basically, as I was saying yesterday, I expect a lot of volatility. I expect the market to basically be looking to grab liquidity. I've been talking about that for quite some time. Ultimately, when the market has very little demand in it, the larger players, the market makers, the institutions, they're going to go after the liquidity. Wherever the money is, they're going to push the price towards it, and they're going to basically grab as much liquidity out of the market as they possibly can. It's how they are making money when at times are like they are, right? So ultimately, this doesn't really affect our kind of retail kind of thought process so much, because we are still bearish on Bitcoin. And we are, of course, still looking at those moves to the downside where we will be looking for deeper price action. Now, our stochastics RSIs are in really good positions on the 1 hour, 4 hour, 8 hour. So we are looking for progression upwards. We'll be looking for a bounce there, but I wouldn't expect terribly too much, but we'll see how it kind of plays out. If we throw on divergences, you can see that there's some bullish divergence here just at the bottom. So we are looking for this move to the upside. So, stochastic RSIs and bullish divergence, the fact that we completed a WXY/XZ, ultimately, yeah, we're looking for a bounce to the upside. It should be no surprise if the price action does go up to test those areas, in my opinion. Now, it's possible that, things do completely fall apart here, but I don't expect that to be the case. I still expect us to kind of move on up a little bit more before we do actually move on down on these smaller kind of time frames. Let's go ahead and take this to the daily. On the daily time frame here, you can see that we were still dancing around the 50 EMA, the 50 SMA. Not a lot has really happened. We can see that obviously we saw some volatility. We found brief support on the 50 SMA on the 30th of January. We lost that yesterday. We found now support on the 50 EMA. So the 50 EMA current support, the red line, at 41,914. If we lose that, I don't need to tell you guys what's going to happen there. We are going to be moving on down. Now, as we have been talking about the sell the news event, they're moving down to 38,555. That's a pit stop. We bounce up, and I've been talking about that for about a few months or so. We're moving down to kind of 37, 38. We bounce. We then move down to probably 35. We bounce a little bit. We move down to 30. Right. We're ultimately looking for the 30k areas. You can see the 200 hourly, 200 daily EMA, if I can get my words out today, is coming in at 35,972. This is the area of first kind of thinking about the pit stop, right? 35,000 to 37,000. You can see this yellow box area right here. We were on this journey to the downside here, but we did find that this previous area of resistance has turned into support. I don't think that's going to last though. So I do expect us to move down here, but that's not something that's going to happen instantaneously. It's not something that's going to happen overnight, and retail investors have to learn a little bit of patience. There's a rhythm and a rhyme to this stuff. It isn't going to be instantaneous. There's no quick money to be made, and it's going to test your patience. It's going to test your emotions in the market as well. Ultimately, this is something that I think is going to play out over a few months or weeks into months or so. Okay, so patience is kind of the key here. So we will be looking for a move to the downside overall, but it's not going to happen overnight. The stochastic RSI is up in the overbought area, so we are looking for corrections, but until we see the smaller timeframes bounce up, we can't expect the large timeframes to move down. Okay, now, so that's going to take some time to play out, but it is something that we need to be aware of. The RSI, let me go ahead and bring this up here, is actually now just dipping below that midline, so it has turned into that bearish position. You can see if I draw a trend line on here, that ultimately we're in a bearish trend on the RSI, so we are looking for moves to the downside. There's no divergences though, so again, we're looking okay from that point of view. I'm not too concerned about any of that. The RSI obviously is dipping down. We just had the cross of the stochastic RSI on the average line being the white line and the yellow line being the stochastic RSI. When this crosses is when you see momentum truly shifting to the downside. That happened to coincide with this big move 3 days ago to the downside. Okay, so we are still looking for more. We haven't yet kind of finished this one off. Obviously, the move to the upside took us from oversold to overbought. We saw pretty decent growth in that. But again, I think it's now done. Okay, we saw 13%, and we are going to be looking for more moves to the downside. But again, it takes time. Be patient. Move this up into our weekly time frame. Our weekly time frame can see that brief supports found on the 618 area of the fibs. Obviously, resistance coming in on the 786, and no closes on the weekly time frame above the 702. As basically what I'm telling you guys here is that there's a lot of resistance up in those higher ranges, and unless we can close above the 702, I don't think we really have a good strong shot at going after the 786. Right, the 786 area is $50,000 Bitcoin. Whereas we need to see a closure above $44,200 if we want to see some kind of bullish movement here. Failing to close above the 702 is incredibly bearish for Bitcoin. Bitcoin gets rejected on the 702 all the time. This is a key area for BTC, and it has been rejected. Now, brief support currently here at the 618 at 38,984. A closure below 38,984 is going to be giving the bears a almighty boost of confidence, taking Bitcoin down even lower. 32,000 is 50% retracements. And of course, as you can see here, this previous area of resistance yet to be tested is 30,000 to 31,000, or 30,000 to 32,000 if you want to round up. This is going to be the key area where I think Bitcoin has to find good support. If it can't find support here, then Bitcoin is in major trouble. So I am looking for Bitcoin to kind of find support no lower than 30K. It'll be interesting to see how that plays out. Our RSI on the weekly time frame is incredibly high. This is not good look for BTC, so we have got much further to the moves to the downside. Now, the RSI is just coming down from the overbought area, but the stochastic RSI is just coming down and just dipping down into the oversold area. Now, the oversold stochastic RSI can be a little bit worrisome for many people who do not understand the ins and the outs of what the stochastic RSI is doing. Ultimately, it's a lot more sensitive to price movements. And however, it doesn't necessarily mean that you're just automatically going to reverse and we're going to move back up again just because you're oversold. The stochastic RSI is much better on kind of taking a look at sensitive price movements when you're not in a trend. If you're trading sideways, the stochastic RSI is your friend. If you are in a bit of a trend-based move, which I do believe we are in, as we have very little overlapping structures, the RSI is going to be the one to really help you understand where you are. And we've got a long way to the downside to go here before we see any kind of major kind of bouncing, in my opinion. Now, if I do draw a trend line on our RSI, and you can see right here, I'm just going to draw this in. Just approximately right around here, you can see that this has got quite some growth to even test its upper trend line area on the RSI. This means that there's still plenty of room to the downside before we might bounce, and a bounce is what we would be looking for. If I kind of put into kind of context here, we had the high over this side, a move back down towards this trend line, and then another move to the upside. Another retest of this trend line on the RSI before moving up again could be a great position for Bitcoin. So again, I'm looking for 30K Bitcoin to hold out. If 30K Bitcoin can hold, then I think BTC is going to be in a really strong position in the longer term. Obviously, we had the FOMC. Yesterday, we saw some volatility. And, I think for the most part, we will be looking for a Fed pivot or a reversal in interest rates later in Q1, possibly Q2. But if we're hopeful and we're lucky, then we might be talking about March of 2024 for a pivot. If a pivot happens, then the stock market is likely to crash by 50%. Any correlation with cryptocurrency in the stock market, we'll see hefty correction in the BTC market as well. And I know that sounds counterintuitive because a reduction of interest rates is actually bullish, but typically and in history, the pivot or the reduction of interest rates only happen when liquidity in the market has completely dried up. This essentially means that the market is at its possible worst place, and a lot of people are looking to sell their assets cheaper and cheaper and cheaper to try to extract liquidity. As such, you tend to find that the market crashes at the point of a Federal Reserve pivot. So knowing these things, it's important that we understand that there's going to be more damage to the downside. But what we want to do is we want to hold up where we are at the moment so that when we do see things like a Fed pivot, that actually just fuels us down to that 30K support. If we can't hold 30K support, then really we are talking about going back down to 25. If you can't hold that, you're talking 20 to 17, and it gets pretty bearish from there. So for all the bulls out there, you're really going to want to make sure that you hold Bitcoin above 30K, and all those bears are going to hope that Bitcoin at 30K cannot hold. So why don't you check out my thoughts on Cardano, where I think 2024 is going to be a pretty big year for ADA in this video right here, and I'll catch you all in the next one.